With the recent market crash, one of the most common questions we get asked is whether the bull run is over. In this video, we're going to dive into my thoughts on this and why I still am incredibly bullish on Bitcoin and of course all those alts. As we get into this video, if you do find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, why not subscribe, tap the bell, select all notifications, and in doing so you will be kept up to date with absolutely everything we do here. Right, with that said, done and out of the way, let's dive into some technical analysis on why I am so bullish on Bitcoin and of course all these altcoins, as the market has still got some leverage to go. Okay, so we are going to take a look at Bitcoin in a bit of detail to understand that we haven't seen the top just yet and why I think we are going up to about $181,000. So we have got Bitcoin here paired with the USD. We are on the weekly chart and Bitstamp is our data source for this to start with. So what we can do is we can take a look at the entire history here, right? We have all of the Bitcoin weekly candles, right? All the way from 2011 through to current, right? And what I've done here is I've dissected this down into bull runs, okay? So we have the bull run peak here, this yellow dotted line, okay? This actually was 2013, okay? So this comes in at around November, so basically that's when it peaked, late November, okay? And then over here we have the 2017 run. This peaked out in about around the 11th of December, okay, 2017. And then obviously I've got a yellow line over here. Okay, so let's first of all start over here on the left-hand side and talk about what we're talking about and dive into what's going on back in 2013. Okay, so basically the bull run started. And it started approximately in May 2012, right? Basically, in May 2012 is where we started to see a significant rise in value. This is pretty much the starting position. Now, from here to the first peak, which is this one just here, it was a short period of time. And this is when people were thinking that the bull run was over. We went down in value and then only to see us actually surge right the way back up, okay? The entire run for the bull run here lasted 546 days from our lower area where we actually flipped over the Gaussian Channel. I'll get into that in a moment, through to the actual peak, okay? Now, from peak to peak, there was actually a 231-day delay. Okay, so basically a lot of people were thinking that we're going into a bear market. We started slipping down here, and there was actually another pullback right before we went parabolic, right? And we think about where we are right now. We obviously have had one peak, we fell back down. We're starting to move our way back up and we're getting a little bit of rejection. And this is very much like what we saw over here before we had that second top where we went up much higher. Okay, and again, that was about 231 days from peak to peak back in 2013. After this peak, though, we did see a bear market. We went down, okay? We went down and we set these lower lows and we kind of bottomed out, okay? And we kind of bottomed out actually in 2015 and traded sideways for a moment and before we really triggered a bull run just over here. This kind of came in about the December 2015. Okay, this then started a nice bull run to the upside, but unlike what we saw previously, there was only a single top to be had. And again, that bull run actually was 714 days. Okay, so we take a look at where things actually started in the bull run, just down here, to where it actually peaked, right? 714 days. So a little bit more than our 546 days by a small amount. We'd actually then look at peak to peak, and that was 1,470 days. Okay, so we know that we had a very interesting kind of run over here. There was an initial period. If I actually grab hold of my date range for 1 second, and we actually take a look at where things were running. If I grab it from here, from here through to the top, well, we can see it was about 315 days, right? 315 days from the start of the bull run to the first local top. Whereas in 2017, there wasn't the first kind of peak. It just kind of went straight up, peaked, and then went down, okay? So then we think about where we are heading, right? Obviously, we have an interesting time period from peak to peak of 1,470. So what would happen if we were to then apply 1,470 days from the current peak over to our new timeline, as in where we think 2021 bull run is going to end? That would actually put us around December 20th, 2021, okay? And again, if we take the position, the starting position of the bull run and the 20th of 2021, December that is, that would actually then bring us into about 18-day bull run, right? Which again wouldn't be too far off what we saw back in 2013 with a 546-day bull run. So again, pretty much aligned to the 2013 model here in terms of time period, but also in the fact that we could potentially see this double spike, right? We obviously have the first one, we then trade down or sideways for a stint of 231 days, and then we go up and peak, right? So interesting kind of thing to kind of acknowledge. Now, if the bull run were to have ended already, it would have been the shortest bull run in history with only a 266-day run, okay? i.e. taking it from the moment it started up to the top that we've seen so far. And that to me just seems very unnatural, very, very short period, and definitely not in line with the bear market that we had seen. Okay, so therefore the expectation wouldn't be that the bull run would end on such a short space of time. In fact, I would say that we're actually more likely going to be pushing up in the same way that we saw previously. And again, that 266 days is again a lot of what people were thinking back in 2013 with a 315-day run. Okay, this is incredibly short. It's even shorter than what we were thinking back then before we did spike up there. The overall 518-day run would be the shortest bull run in history yet as well. So again, we have to also acknowledge that. And it does, of course, imply that we have this 1,470-day peak-to-peak scenario, which might not. It might actually extend a little bit further beyond that. So that's going to be an interesting one if we adjust it a little bit for future bull runs when we analyze our data. But of course, we can go a little bit further than all of this because, you know, this is just using dates to try to give us a bit of a flavor as to where things are going and what our thoughts and patterns are. But when we actually start coupling this with other data, we then actually start to see a lot more consistency and actually more reliance becomes on other indicators. But this actually does help us understand the timings of bull runs and where things are going, right? So we're going to start with that, and then obviously going to jump into the Gaussian channel. Okay, the Gaussian channel is a good indication of when we slip into bear markets and when we're actually bullish, right? So what I'm going to do is just focus in on this 2013 run here for a second. Okay, so we obviously do have peak number 1 just up here. We've pulled down towards our Gaussian channel, but we didn't enter it. You know, we stayed above the Gaussian channel here, and where we spiked up again, and then we fell back down, retesting this area. We can wick in, but we didn't get any closed candles inside it, and then we pushed up, and then obviously when we fell into it in a really strong way, what you saw is basically us slipping into a bear market. Okay, and then once we're slipping through the bear market, we're trading underneath this Gaussian channel, then we're pushing up above. Now, what's really good about the Gaussian channel is basically when you start to see this scenario, this is the best time to be buying Bitcoin, right? When we're down here at the lower end. So it's a good use case for this Gaussian channel. But then as you can see, once we cross the Gaussian channel and we're then tracking all the way above it in 2017, as we go and get that spike to the upside, right? Again, this is the bull run for 2017. And then in 2018, we then go ahead and slip down, right? We basically pull down into this bear market, and then actually we start a new run. Okay, now what's really interesting about this is obviously the black swan event, if that's what you want to call it, but obviously the pandemic did have a bit of an impact. So we swapped, we went down into our bear market. We then started to spike up, okay, starting a bull run, but only actually everything that was going on in the world at the time then obviously caused a crash. We actually slipped back down here, and so in theory then have to come back up and start a new bull run over here. Okay, so right now you can actually see that you start the bull run around about this point in time just here, which is basically August or July, August time of 2020. That seems to be the time when we actually are above the Gaussian channel rather than trading inside it. So this seems to be the point where we actually started, although in theory we should have stayed above it over here, but with everything going on in the world, this was very difficult, and we saw the crash, right? But otherwise, we are actually then taking a look at where things are going, right? We have the first spike, and this is really not very high at all from the Gaussian channel. We then pulled back down. We still haven't closed inside. We had a wicks going in there. Okay, but we've actually managed to keep out of the Gaussian channel. We've retested this area, but again, we're well above it right now. So overall, we're actually performing quite well against the Gaussian channel. We haven't slipped inside it. We're testing it. And as long as we don't slip into the Gaussian channel, then I'm very bullish to say that we're going for that secondary top at the upside. But obviously, time will tell. You know, ultimately, they can slip into here and slip into a bear market. But I am going to be watching that and observing that. But the most recent pullbacks that we have here, looking at our timelines, are not indicating that we are likely to see this bear market low come in right now, and we're not going to void the analysis of our timelines or of our Gaussian channel. So far, this has worked really well in the past, and we are looking to continue this run to the upside. Okay, the small pullback that you see is very much in line with what we have over here with our 2013 model. We are now looking to go parabolic and take this up to those next stages. So everything to play for in the next couple of months on this piece here. But of course, we can go a little bit further, right? So not only do we analyze the timelines of where things have been going, we have the Gaussian channel to help us understand when we slip into bear markets, when we go bullish. But of course, we can then obviously take a look at the stock to flow. Now here we actually have the stock to flow deflection, and this is actually a really good way to understand the value of Bitcoin against the stock to flow model, right? And actually, when we take a look at this, anything below 1 is undervalued, anything over 1 is overvalued, right? So it's quite a simple concept. And basically, if you're in the green, that's a fantastic buying opportunity. And if you're in the red, then obviously you're just going to be riding it up and thinking about selling it, right? And we haven't been this undervalued since 2017 before we went parabolic, right? Even back in 2012 and to 13, we were always overvalued. But yet over here on this side, we haven't been this low pretty much ever, right? So the idea is slipping down lower and becoming even less valuable against the stock to flow model. The stock to flow model would be completely invalidated at that point. When we actually take a look at the stock to flow model, we do know that we are pretty much tracking in a very similar way that we have done in the past, and we should be looking for this spike to the upside. Although the pattern is slightly different, it is still intact, and again, plan B did call a low of about 43k in September, with a push back towards 60 in October. So ultimately, we are looking for some interesting recovery to occur now, as we do look to push the price back to the upside. But again, we can go a little bit further, just taking a look at the time frames, the Gaussian channel, the stock to flow deflection, the stock to flow. We can, of course, jump over to the artificial intelligence and machine learning of advice.io. This can then obviously help us understand what's going on with the underlying value of Bitcoin. And here we can see that there is extreme fear in the market right now, and I get that. Obviously, people are very confused over what is going on. You have lots of different influencers in the space saying that the bull run is over, or the bull run's nearly over. In 2 weeks, it's going to be over. You then have people saying we're going down to 20k, we're going down to 38k. So of course, there's a lot of people who are very confused in the space and no one really knows what's going on. But here, the artificial intelligence and machine learning takes all the underlying data for Bitcoin and then analyzes it and gives us a bit of a flavor as to how it thinks things are going. Here we can see there is extreme fear, and that extreme fear is quite obvious with so much noise going on in the space. The Sharpe ratio is an A2. This is your risk reward ratio. So the risk to holding Bitcoin versus the reward of holding Bitcoin. Here we can actually see that we've just come in contact with our 50-day average, but an A2 rating for today isn't too bad at all. It's indicating actually a pretty reasonable risk reward. Okay, so that's an interesting, almost opposite to the amount of fear that's in the space. The moving averages have been affected with the amount of fear. That is hard to argue. Obviously, they've dropped down to a C2. So again, that is an issue. The peak end value demand is at a B2. Again, that's actually really good considering everything that is going on. Profitability is an A1 and liquidity, not a problem at all with an A2. So the underlying data really just comes down to a couple of issues. This comes down to the fact that there is sentiment in the space is incredibly fearful. And this comes down to the fact that so many people, influencers in the space, are calling out all these random numbers for Bitcoin. And that's not really helpful without any concrete kind of evidence that backs up their claims. Why are we going up to, all-time high in the next couple of weeks, only to be the peak of the bull run and then we're going down into a bear market? Where's the evidence of this? And where's the evidence of going down to 38k? You're using a Wyckoff accumulation pattern that I cannot see inside the data. We also take a look at people calling out an ABC correction, pulling us down to 20k. In doing so, that would completely invalidate the bull run, in my opinion, and therefore very unlikely to occur. So actually, when I start looking at the data and I start taking a look at the artificial intelligence machine learning here at advice, I take a look at the stock to flow model, the stock to flow deflection, where we're incredibly undervalued. We can also, of course, take a look at the exchanges, jump into the percent held on exchanges, right? So the percent of Bitcoin. And we can see that we're significantly declining the amount of Bitcoin on exchanges. We also take a look at the inflows for Bitcoin, and we actually just bring this down into the most recent time frame so we can see there's a small spike here, but it's nothing in comparison to what we were experiencing back in May. So there's not exactly like a huge inflow of Bitcoin. The percentage of Bitcoin being held on exchanges is actually the smallest it's been in a very long time. We obviously have the chart here where we can see the timelines, we see the Gaussian channel, all of that makes a lot more sense than it does to say that we are just dropping down to 38k because, you know, there's a Wyckoff accumulation pattern, or the fact that there's a black swan event that no one seems to be able to acknowledge or claim what it is, but we're apparently going to be peaking and then plummeting. For me, I see the Gaussian channel intact. I see these timelines intact. I see the artificial intelligence saying that there's a sentiment issue, but ultimately the risk-reward ratio and the fact that you know, the profitability is there, the liquidity is there, the exchanges haven't got those inflows, it hasn't got the percent held on balance, the stock-to-flow deflection shows us incredibly undervalued. All the data to me is actually indicating that we are looking for a significant push to the upside, not to the downside. And again, we couple this again with the current performance. If I take off the Gaussian channel and really focus in on what is going on our daily chart, this is where we have that Fibonacci retracement tool. And when we actually take the performance of the high of wave 3 and the low of wave 4, this shows us moving up to $181,000 as we go parabolic for this next leg of the bull run. Again, this would be very much in line with the stock to flow model and where it predicts Bitcoin should be before we actually start to see a bear market. So for me, this is where I'm aiming. This is what my thoughts are on Bitcoin. And if Bitcoin does this, then the bear market is not here. The bull run has not finished, and the altcoins will be going parabolic too. I'm going to leave that there, guys, but let me know your thoughts and thoughts and opinions in the comments below. Do you think we are over? Do you think this bull run has finished? Do you think we are basically now slipping down into a bear market? Or do you think that actually we are going to be going up to new higher highs and going to set some interesting price discovery for many of these altcoins? Really interested to know. Guys, if you found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, why not subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With this said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.